Everyone, my name is Bill Levinson, Managing Partner with Levinson Associates. We have a special guest speaker that's joining us today. We also have Joseph Loughran, our Marketing Vice President. I'm going to introduce our guest speaker in just a few more minutes here. She happens to be a friend of ours, and she's also a VP for one of our core carriers that we're going to go over on today's call. So we're going over a few sales ideas, concepts, some hot new products, some living benefit products that we think will appeal to the masses, of course, with agents and clients. We're also going to go over the Levinson updated scholarship platform, okay? And the reason why we wanted to touch on that on today's presentation is because the carrier that we're going over and one of these hot new products all comes free with a scholarship program for your clients. That's up to 1 year. We now have over 350 colleges across the country where you can redeem this scholarship coupon. So every client gets an online account, and they literally get up to $40,000 or $50,000 of tuition paid for nothing. It doesn't cost the client any extra premium. It doesn't cost the agents any commission reductions, and there's no fee to participate in the program. Okay, this is an added benefit just by working with Levinson Associates. So it really is a huge feather in your cap as an agent, because you could go out there and not just market and sell life insurance and living benefit products, but you could also say, you know, hey, yes, I'm talking about whole life with cash accumulation or a disability or critical illness product with return of premium, but you can also talk about college planning for little Johnny and little Susie, where you can pay up to 1 free year of their 4-year tuition. So it's a huge plus, and it really separates you from your competition. And just so you know, the program is exclusive to us, which means that your competition cannot go out and market the same program unless they're under or they work with Levinson Associates. So once again, this is going to give you a big leg up. So take out a pen and paper. We made some awesome new changes to the program. And then, of course, you're going to hear about one of our core companies and awesome products that all come with the scholarship program. So great new stuff to talk about. Sit back, relax, enjoy. We're going to run about 30 or 40 minutes, so we're going to be pretty quick. Also, brand new for 2016. I know we're a month in now, but we still have some great new ideas, concepts. We have our annuity division that we launched about 5 years ago now. And for the first time ever, we have put together an incentive program that involves free E&O, trips around the country, cruises, cash, basically everything, okay, just by placing your annuity business with Levinson. Joe's going to touch on this quickly, and then we'll move forward into our other perks. Joe?
Yeah, thanks, Bill. So we're really excited here about the Levinson Qik Assets Annuity Sales Contest. Real briefly here, we've got a lot of great prizes that you can earn if you're already writing your index annuity business with us, or maybe you're looking to get started with the Levinson Annuity Division. Our annuity division is actually headed up by Josh Hoffman, and you can reach him internally at the office at extension 23. But real quickly, the Qik Assets Contest is pretty neat. Just by writing that index annuity business with our office, you earn multiple rewards and even cash bonuses. You'll see the first prize is actually complimentary E&O coverage for 1 year that actually covers B+ or better rated carriers, or you can actually take the cash equivalent at any one of these levels, which starts at $1,400 or $400. The second level here is complimentary annuity leads through a great program that's completely turnkey and actually allows you to access those annuity leads 24/7 via the online system or that cash equivalent of $500. And then at the bottom here, you'll actually notice we have some Las Vegas VIP agent trips, even some 4-day cruises, and especially a tech package, which is great. It's all Apple products. So not only are you going to receive the Apple PC, but also the iPad, We even have an iWatch contest that you can receive the iWatch, and even Bose headphones actually by Beat. So a lot of great things just by placing that annuity business with our office. Reach out to Josh Hoffman again. He is at extension 23 in our office to actually learn more about earning all these different bonuses.
Okay, thank you. So another big plus by working with Levinson, we launched our own exclusive E&O program about 8 weeks ago. So we've teamed up with AIG. We've been building this for almost a year now. And we finally were able to launch this to Levinson agents only. So not only is this great for you, but once again, if you're building your own hierarchy or if you know any agents that you want to place in your own hierarchy, this is another huge value-added incentive by working with you who works with Levinson. So again, the scholarship platform, as you know, you can use that to go recruit and place agents in your hierarchy. And then the second part, okay, and we have probably 30 or 40 parts to the big puzzle that make up the iGenius platform. But one of those other bullets is the E&O policy that is $1 million of coverage for $395 a year. Okay, and the best part is this covers not only A- rated companies or better, but it covers B+ rated carriers or better. So especially if you're working in that final expense or annuity world, there's a lot of competitive companies that are B+ rated. Well, your E&O now covers those B+ rated or better companies. So again, a huge plus, and typical premiums for E&O range anywhere from $440 all the way to over $1,000. And this covers all companies or all agencies that you work with, not just us. So again, take advantage and use this to build your own hierarchy. Okay, Joe is going to talk about our upcoming agent training events. I would jot down some of these dates. You really don't want to miss these dates. Okay, very important. We all want you to make 2016 the best year ever. Obviously, without furthering your education, that will not happen. So jot this down. These are all free to all Levinson agents. Joe?
Yeah, thanks, Bill. So a couple upcoming webinars we have Monday of next week at noon. We're actually going over some disability income products specifically designed for government employees. So if you're looking to actually kind of develop a specific market segment, those federal employees are a great place to start. We're going to talk about the DI products, how to approach those sales and really generate more revenue. And then Wednesday, which is the 3rd at 2 p.m. Eastern, we have a special annuity sales training with Guggenheim. We're going over the TriVista product. A lot of great bells and whistles, especially if you're already in the annuity business. This is a great way to go back to your clients and show them a very, very new competitive index product. You can actually access over 100 different Levinson on-demand videos and recorded trainings on our YouTube channel. So if you haven't seen that, definitely check it out. And then on the right-hand side, you'll see we have a little image here for the 2016 Levinson Expo, which is Friday, April 8th. This is actually the 9th year that we've hosted the Levinson Expo. It's basically a day full of sales ideas, concepts. We have all of our top carriers and VPs there. You'll get to meet some great underwriters, some great motivational speakers. This is free for all agents to attend, but if you happen to be an agent that's outside of Florida, or even if you're local, we put together some great incentives starting at just $15,000 a premium, where you actually get a free night at that beachfront resort, which is a gorgeous location, and even round-trip airfare. The neatest thing about the Levinson Expo contest is that all your business qualifies, whether it's life insurance, disability, critical illness, annuity products, even long-term care. Everything qualifies for that Levinson Expo. Definitely a day you do not want to miss. I promise you, you'll walk away with some awesome sales ideas to generate more clients and more prospects for the rest of 2016.
Okay, moving forward here, okay, as you know, our promise to you is to always build and make our Levinson platform bigger and better using the best technology resources that are available. So I think the proof is in the pudding here. If you look at our platform, the free websites and quote engines and lead capture that we offer for free is a huge feather in our cap. So we're not just another Me Too agency or IMO. And if you've been with us a while, you know that we stand behind that, and literally the proof is in the pudding. So here we are now in early 2016. We have built and revamped our CarrieLevinson.com website that will totally change the industry, okay? We have incorporated some great new tools such as e-requirement. This is so cool in advance. The way this works, okay, if you think about the old times when you sent in an application, and if an underwriter said, oh, Bill, you forgot your scuba questionnaire because your client scuba dives deeper than 100 feet. Well, in the past, Bill, the agent, has to go find the form or get it from the case manager, print it, send it to the client, wait for it to come back. As you know, we can lose a week to a month just waiting in downtime if you even get it back. Well, now with e-requirement, this is just one of our many new tools that we're featuring on the new website, but with e-requirement, the way it works, the underwriter says, hey, we need a scuba questionnaire. You, the agent, log into our website with your unique password. You literally pull up the scuba questionnaire online. You can fill it out with your client, either on the phone or in person. You fill out the missing questions, hit submit, you are done. That form automatically gets sent directly to the underwriter. A copy goes to you, a copy goes to us. Everything is recorded in real-time fashion. The underwriter gets the form, makes their underwriting decision, and you are done. So that's just one sample of some of the cool new tools that we're adding to the CarrieLevinson.com website. It's going to be awesome, and we're launching it in less than 2 weeks. At the same time, we're building our first ever Carrie Levinson mobile app that you can download from the iTunes App Store or any Google, Android, of any type of device, tablet, desktop, any smartphone. It will be 100% compatible and free to all Levinson agents, and you will be able to do everything that you can imagine, okay? Just like you're on your desktop in your office, you'll be able to do the same exact things right from your smartphone, even if it's a Sunday at midnight. So awesome new stuff here coming out in early 2016. You'll see everything launching within 2 to 3 weeks. We couldn't be any more excited. Some hot new products that we just rolled out. The SBLI Quick Term was only available on the property and casualty side. We are the first agency to roll this out exclusively to life agents. What's so cool about this? It's 100% client driven. Okay, what that means, you can send out an email blast or put this on your Facebook page. Your clients can go in, run a quote, sign up online, get an approval in less than 10 minutes, all while you did nothing, and the rates are very competitive, up to $350,000, up to a 10-year term, and it's level guaranteed. This is not going to replace what you're doing, but this is a great way to speak to and relate to the younger generation who they don't want to meet you on the middle of a Wednesday night at their kitchen table. Okay, you can email blast this out if you want to team up with mortgage companies or P&C agencies. Okay, get a hold of their database, send out an email blast, and if your return is, let's say 5 to 12%, you can supplement your income and do very, very well off a product like this. Very simple, $350,000, 10-year term, level guaranteed, decisions in less than 10 minutes, not weeks or months. On the right side, the ultimate door opener, same thing. This is 100% client driven. You do nothing. You literally send out a link. Okay, this is awesome for grandparents or parents that want to put a whole life policy on their children, okay, and think about their education. So here we are. We can get up to we can go from $5,000 to $35,000 in a guaranteed whole life product. Comes free with the 1-year scholarship. That's up to $40,000, $50,000 of value there for less than $2 a month. That's where the premium starts. I don't know a grandparent or parent that is going to say no to this. Everything is guaranteed issue, client-driven e-application. You can literally email it to a client or put it on your website, Facebook page, social media. The client runs the quote, signs up online, and you and the client are done. You get paid full commission plus renewals. It's that simple. I call that the ultimate door opener. Okay, moving forward here, our scholarship program is, again, an awesome value-added piece for our agents and, of course, your downline. Okay, what I love about the program, okay, we have some great core companies that are involved, including Surety Life, which is a big, big plus because they have very competitive products. What I love about this as well, okay, so not only do you get your foot in the door and you can sell life insurance with a new dimension because you can talk about their children's education. So it's not just life insurance anymore. It's a new story to tell. Okay, so now let's say the client buys the policy, okay, and they get their free scholarship. Everybody's happy. Now the way it works is every point is $1, okay? So every point is $1 of scholarship. So if your client refers their neighbor to you for the same program, that client gets an additional 500 points uploaded into their account. So that's another $500 of scholarship. So this builds a referral base for you, the agent, okay? Big, big plus. Plus, just for the client seeing you every year to do a policy review, you give them another 500 points or dollars into their account. That is huge, okay? Another great part of the program, if you're holding a seminar or if you simply set up a phone appointment with a client, even if they don't buy the policy to get the scholarship program, you can still give them a $500 gift card for a free $500 scholarship just for listening to you or setting up an appointment with you, even if they don't buy the policy. So you can use this with other angles, okay, and it could be a huge resource for you. So just sit back. Joe's going to go over a few marketing material pieces for you, and then we're going to send out an email to everyone on the call with more information. But I want Joe to just touch on a few statistics, and then we're going to introduce Andrea. Joe?
Yeah, thanks, Bill. So just to give everyone a great idea of just how large this program is, last year the total tuition reward points that were submitted was valued at just over $43 million. So if you look at that number, it's huge. I mean, $43 million off of college education is what this program's achieved just last year. What we're seeing is, especially looking at the new colleges, is actually 345 colleges in over 46 states as of January of this year. The average tuition savings per year is actually $13,000 per client. Right now, there's just under 400,000 clients that are actually enrolled in the program. So it is the country's largest private college savings program, and I'm going to actually dive into detail and specifically how it works. But like Bill mentioned, just for meeting with that client or that client doing some financial planning, purchasing some eligible products, or earning those tuition reward points, this is great for grandparents, parents, nieces, nephews, aunts, uncles. Any blood relative can take advantage of this program for any family member. They actually specify which students or which family members are going to receive those tuition reward points. So it's not uncommon to have both, a mother or father purchasing an eligible product, and then also a grandparent purchasing an eligible product. All three of those policies are going to help accumulate tuition reward points for that actual student. And then what's so great is that student actually submits those reward points directly to that college to get that discount. Like Bill mentioned, there's some great referral incentives built in. Another great thing that you can use to generate more business and more leads is the annual policy review. We all know that the typical client life changes as far as, having a child or getting married or even getting divorced, getting a raise. All those things can generate a great sales opportunity for an agent. But what often happens is you're not sure when those different events happen in your client's life. By actually going back to the client and saying, hey, Bill, I'd love to set up an appointment, the good news is you actually get an additional $500 off of Johnny's college education just for having a quick 2-minute phone call. Give me a shout when you can. That holds a lot of weight. It's a great reason to get back in front of clients every year. That's built into the scholarship platform. And again, every policy anniversary, that client earns an additional 2,000 reward points for that college discount. So a lot of great things built into the program to actually help generate those activities. One thing we also did, which is is we updated the way that clients enroll in the program. When we first started 4 to 5 years ago, you had to actually go in and manually put everything in for the client. We revamped that entire process, made it very simple, very turnkey. It's a very simple 3-step process. You basically email the client the registration link, they enter in your agent Sage ID, and they register for scholarship reward points. It's that easy. You then have all that client's data that you can use to market to them on an ongoing basis. So you're going to look at all the students that they're adding, all the additional family members and referrals that they're adding. The other great thing is this creates a multi-generational lead system to go back. So anytime this family now is going to think about insurance policies or plans, they're going to remember you as the agent. And we put together some great marketing materials to help make that happen. The first thing is an agent retail website, which we created several years ago through insprofessional.com. This gives you your own custom branded website. There's actually a scholarship tab on that website so clients can learn a little bit more. We have customized email marketing templates so you can drip market on those clients. We even have something called the Professor 101 training series, which really educates you as an agent on how this entire scholarship platform works, how you can actually reach out to more clients and really become a scholarship expert to explain the program and make sure the clients are getting the biggest discount available. We also develop direct mail marketing pieces you can customize with your label. And then last but not least, a scholarship website resource, which gives you the cost of every single college in the U.S., all the statistics, all the entrance exam details, how to fill out FAFSA forms. So you pretty much have a one-stop resource for all those clients to educate them, be a great sphere of influence, and then generate more activity just by using that program. We've seen agents really double production just by using this one-of-a-kind program.
Yeah, and just keep in mind, I know you just saw a lot. There's a lot going on there with our presentation, but it's literally so simple. You get appointed with our carrier, okay? You get an email that has your own unique agent number. You literally email that out to any client that purchased an eligible policy. They enroll themselves in 2 minutes, and you and the client are done. And then your name is constantly in front of that client every single time they check their online account. So the program works. Okay, so without further ado, we have our friend Andrea Blanchard on the call with us from Surety Life. She is our Regional Sales VP. And keep in mind, Surety is one of our core carriers, and most of the products she's going over today come free with that one-year scholarship program. Andrea?
Thank you, Bill, so much for that introduction. You know, I'm always blown away listening to you and Joe talk about the services and the value that you're able to provide the agents that affiliate themselves with your organization. I work with a lot of different groups throughout the Southeast, and you always never fail to impress me. So great job for that, and thank you for this opportunity today. Well, I know you're all here to learn about our hot new product that Surety released at the beginning of October. I'm so excited to share with you today what to offer, especially when it comes to this new product, and then maybe to give you an overview, if you're not familiar with us, at what we have to offer here at Surety Life Insurance Company. So you might have heard about this new product. You might have a lot of questions. You may be asking yourself, what is First to Die? Why the heck did Surety create this product? You might even be thinking to yourself, how is Surety going to sell this? And what am I going to say when I'm out talking to my client trying to sell this product? Well, the good news is that in today's presentation, I'm going to answer all those questions, and then we're going to wrap up with a high-level overview on other products that we have available. So to give you a little history about Surety Life Insurance Company, and my slide's not moving. There we go. We are a mutual company based out of Lincoln, Nebraska. So we have a 125-year legacy working with the middle income marketplace. And there's a few things that I want to share with you that we've learned over the years working in this demographic. One of the biggest things that we've learned is that cost plays a huge factor in a middle income family's purchase of life insurance. And one of the reasons we designed the First to Die product is because it's actually a cost-effective way to get permanent life insurance protection in the hands of a consumer. We've also learned that convenience plays a huge role in getting life insurance, and So when you look through our portfolio of products, you'll see simplified products, fully underwritten products, and you'll also see products like this that are somewhat of a hybrid. They're fully underwritten products, but they have non-medical limits built in. And the first to die has some of these convenience factors built into it as well, which we're going to talk about today. So we're constantly looking for ways to penetrate and work with middle-income families. And as a result, we design products like this joint whole life that work to do that. Now, what is joint whole life insurance? Well, obviously, we're only paying one death benefit, so you're going to get a discount compared to two policies. But before we get into the why we developed it and how it works, I want to make sure we're all on the same page on what the product actually is. When I travel and I mention this product or I start talking about this product, I always have a response, something along the lines of, oh yeah, right, your second to die whole life, your new second to die whole life. This is not a second to die policy. It's a first to die. So this is important because, one, both individuals have to be insurable, and two, it pays out the death benefit upon the first person's death. So unlike second to die, that's mostly for estate transfer purposes, this product is going to be more a solution for income replacement needs. Now, everything that I say from this point forward isn't going to make a whole lot of sense unless you understand that basic. 2 lives, 1 death benefit, and it pays out on the first death. So why did Surety design this product on a whole life chassis? Well, we are a mutual company, so we value our policyholders. And when we experience success, we like to return that back to our policyholders, and the way that we can do that is through dividends. So we wanted to keep that theme with this product. And the second is we are trying to complete our entire whole life portfolio. We already have a very competitive continuous pay whole life product. We have a very competitive single premium whole life product. And so this is just really another tool that you can put in your tool belt that really rounds out our entire portfolio. So that's a market we're trying to grow, a market we're committed to, and we're constantly trying to update what we have available so we're known as a whole life carrier in the brokerage market. So I want to start off by telling you a quick story. I'm sure everybody on the line, would you personally agree that things have changed since 1955? Well, I would say yes, they have. Not only have times and technology changed over the years, but the way we sell life insurance has changed as well. So what I want to share with you is a story about how life insurance was sold way back in 1955. So this is an actual brochure that Surety used to use, that agents used to use to sell life insurance back in 1955, and I'm going to walk you through it today. So it says here, with you in the picture, your home is protected. Now, who do you think this is targeted towards? The husband, right? It's a nice family he's got, some killer pants. This brochure is all about the man. Even if this happens, your home is protected. So the house catches on fire, but the husband's still there, everything's good. But suppose this happens. Uh-oh, the husband disappeared. He's invisible. He's gone, no longer in the picture. If your widow can't pay off the mortgage, she'll lose her home, and where could she find another place to live? Notice that the male is out of the picture, and now the wife is packing up the kids and they're leaving. They had a nice house, but now they have to leave, and where are they going to go? I guess we don't know. We'll just have to turn the page. Uh-oh. What kind of home could she afford on the income she still will have? Without her husband, it looks like she has to live in a bad neighborhood. Moving out to the slums. But if your widow can pay off the mortgage, she has a home if she wants to keep it, an asset if she wants to sell it, and an income if she wants to rent it. A rent check every month for life. When she has no rent to pay, Social Security or a small amount of life insurance income will take care of her living expenses. Mortgage cancellation insurance puts a match to your mortgage It provides cash for one of the finest gifts a man can leave his family, a home free and clear. Now, this whole sales concept is a sales concept designed towards who again? The male, right? Because if you look back 50 or 60 years ago, I say it's basically the Leave It to Beaver sale. You go in, you write some life insurance on the husband, maybe a little bit on the wife, but the husband was the main breadwinner, so the economic loss happens when he is gone. Well, now what's happened is there's been a shift in household, where now not only one person works, but both people work. And not only do they both work, but their incomes have leveled out. So while the male used to make more than the wife, it's leveled out, and sometimes it's even switched. So one life insurance policy today is not enough. You either need 2 life insurance policies, or, and here's where we come in, you need to protect both people. And a first to die policy is going to be the best way to do that. So when you look at dual income families over the past several years, you can see that statistics show there's fewer families relying on one income. So the economic loss happens when the first person dies. And the solution we came up with is this product because we need to protect 2 individual people. So what's the most cost-effective way to do that, especially on a permanent basis? It's going to be with the first to die policy. So that's the primary market we're targeting, the dual income families. And we're going to go through a case study here in a little bit. Now, I just want to throw out some basic product information before we get into this case study. I want to point out that the issue age on this product is 0 to 85, but don't focus on that. What I want to focus on is that it's going to be based on a joint age. So we're going to calculate that based on the ages of the 2 insured. Now, the good news is you know, we have charts that you could use to manually calculate that age, but the easiest way to do it is to run an illustration. And I know that the Levinson's office is very wonderful when it comes to helping people walk through that. So if you do have any troubles or need assistance going through an illustration, I know you could always reach out to Levinson. But when you're running the illustration, you put in both ages and it will automatically calculate and show you what the joint age is. And the reason why I point this out is because if you're looking at the illustration and you're presenting it with your client, it's going to list that joint age on there, and it's going to be based on the 2 insureds. And your client might question where it came from. There's also going to be a joint underwriting class. Now, since this is a first to die product, I mentioned this earlier, but both insureds must be insurable. So we're going to write each risk on each insured on an individual basis and then give them a rate class based on what they qualify for. So we're going to give them a joint underwriting class. So there's preferred tobacco, standard non-tobacco, standard tobacco combination. So for the preferred non-tobacco, they have to both be preferred or better. If you have somebody who's standard non-tobacco, they both have to either be standard, or one could be standard non-tobacco and the other could be preferred. That would also qualify them for the standard non-tobacco class. And then standard tobacco is pretty straightforward. If one is tobacco and the other is non-tobacco, they get a combination rate. But again, the good news is you don't have to know how to calculate it. You enter it in the software and it will tell you the combined rate class that they're going to be. It's going to have the same issue limits as our continuous pay product. So we do go all the way down to $10,000 on this. And I know that a lot of you might be saying, why would I do a joint whole life on a 0 to 14-year-old? That's up on the slide. The answer is maybe you probably won't, but we're trying to keep our underwriting specifications consistent with our continuous pay product, and so that's why we do go down to those lower age levels. I want to talk real quick about the premium bands, and this is where it becomes a really beautiful product. If you're in premium band 1 and you're only going for a standard non-tobacco joint underwriting class, you can actually get this policy issued on a non-medical basis. So it's a permanent product. It's a fully underwritten product on 2 people, and you can get it on a non-medical basis up to $149,999 at the standard non-tobacco rate. So your client doesn't have to do any blood draw, paramed, or urinalysis. I think that is just amazing. It's one of the things we've learned working in this demographic. is that the middle income American appreciates convenience, and this is one way we're able to do it. Other than that, when you look at this product and all the different features, the dividend options, the commissions, the mode factors, policy loans, all these things are going to be the exact same as our continuous pay product. So you really don't need to learn anything new, just understand how the joint risk class and the joint age class is calculated. We are going to have several riders available on this product. I'm not going to go into all the details. I do want to point out that the children's term rider, a lot of times you're going to be writing this on a husband and a wife. They probably have kids. This is a very easy way to get an entire package for the entire family. When you compare the children's term rider cost to the standalone on our continuous pay product, it is priced a little more expensive, but the reason for that is because we can sell this on business owners. And if we sold it on 2 owners, it would actually cover all of their children. So that's a good point if you're working in the buy-sell market space. On the joint disability waiver premium rider, only one of the insureds needs to become disabled to waive the entire premium. So we don't need both insureds to be disabled. We won't waive half of it. We'll actually waive the entire premium in the event one of the insured becomes disabled. There's also a joint level term rider. At a Surety, we're always talking about perm-term blend. It's a great way to keep costs down and low for your clients. You know, when you look at whole life, the biggest objection you're going to get is it's expensive. Well, how can we make it more affordable? We can add the term rider to cover a large portion of the life insurance needs, and then that way the client will have permanent coverage. If they need more coverage down the road, they can convert the term rider at that time. We have the same paid-up additional insurance rider as our continuous pay. So if you're looking to do overfunding scenarios, build some cash value, this rider is going to allow you to do that. We also have the accelerated benefit rider built into the policy, so that can accelerate up to $250,000 of the face amount if somebody becomes, one of the insureds becomes terminally ill or permanently confined to a nursing home. So very similar to the accelerated rider on our other products. Some of the questions you might run into: what happens if the couple gets divorced? I think that's a fair question. Half of all people get divorced nowadays. The good news is it's probably easier to split up this joint whole life policy than it is to split up a cell phone contract. So what we're going to do is surrender the policy. The cash value is going to be split up between the 2 individuals, and then each insured is going to have the ability to get a policy half of the face amount of the original coverage without having to prove insurability. So that new policy is going to be at attained age, but if they want to continue the coverage on an individual basis, they have that option. And they don't have to prove insurability. Another question people might ask: I understand this product is less expensive, but I only get 1 death benefit, right? I've actually heard this from agents when I travel. Well, the good news is when you're protecting against lost income, you only need 1 policy because you need the death benefit in the event of the first person's death. And that's the need we're solving for. So why pay for something you don't need? And if at the point when the first spouse dies, you decide, you know what, I do need life insurance, the good news is that we have a survivor benefit. So if the surviving spouse is under age of 75 or the surviving business owner or the other insured, they could purchase their own policy and have it in force without evidence of insurability. So they're under age 75, the first person dies, they can get the survivor benefit without proving insurability. So they still have the option of having life insurance coverage later on. You're paying less for 1 policy now, 1 permanent policy now that earns dividends, and then you have the option of purchasing a second policy down the road. So you're not paying for 2 policies the entire time, and that makes a lot of sense. Finally, a question that might come up: well, what if something happens and we die at the same time, or we both are in a car accident and both end up passing away? And the good news is that we actually pay double in that situation. It's not good news for the insurers, but for their beneficiaries and their loved ones, if the 2 insureds die within 24 hours of each other, we're going to pay 2 death benefits. So that's the product, that's the nuts and bolts of how it works. What I really want to talk about today is the market where we're going to focus on this and how it's going to be sold. So when you look at the product and the people it's targeting 99% of the married population. And what I mean by that is that most families, most people that rely on two incomes, the economic loss happens in the event of the first person's death. For the other 1% of the U.S. population, the economic loss happens on the second person's death, and that's when you start having estate transfers and having to pay estate taxes. But that's not who Surety focus on. We focus on middle America, and that's the household who's going to suffer the economic loss in the first person's death. So this product is really designed for a lot of people that you know, work with on a daily basis, and maybe even some of you that are on the call today. So the primary market we're focusing on, remember, any two people that rely on two incomes to support their current lifestyle. DINKs, does anybody, I'm sure most of you on the line know what a DINK is, but if you don't, it's dual income, no kids. Our secondary market, which we're not going to get in today, but a lot of people are getting excited about, is that this is also a very cost-effective way to structure buy-sell agreements. So dual income, no kids, what do we know about them? Well, first of all, we know that people are waiting longer to get married, right? People wait until the late 20s, 30s. We also know that they're waiting longer to have children. Since both people are working, a lot of times they'll focus on their career instead of focusing on having a family, so they're waiting longer to have kids. There's some couples that decide, you know what, maybe I don't want to have kids. They're too expensive. So when you look at this demographic, since they don't have kids, they usually have more discretionary income to spend on life insurance. So this is the market we're going to talk about today. What kind of risk does this demographic face? First of all, they've created a lifestyle based on both incomes. They're both working. Let's say they go to the bank to buy a house. Are they going to buy a house based on one income or both of their incomes? They're going to buy it based on both. They also know that paying off debt is important, and they want to get out of debt as fast as they can. So this is also a primary concern. And maybe replacing income might be a concern, but the debt is really the issue with this family. So here we have a case study. We have Cindy and Kevin, age 30 and 27. Cindy makes $65,000, Kevin makes $45,000. So together, life is pretty good for this couple. They're taking home $110,000 together. They recently bought a new house with a $775,000 mortgage. Their monthly payments are about $1,000 per month. This is a Nebraska couple. We have amazing real estate options here in Nebraska if anybody wants to move out here. Weather's nice today, about 45 degrees, so if you want to give up the Florida weather, you're one of the lucky people on the phone who lives in Florida, you can always come out here, we'll welcome you. They're still paying on their student loans. They have $22,000 left and their monthly payment is $244. They also bought a new car, which is basically a $500 a month payment. So when you look at the debt they have, this is a pretty common couple, right? House, student loans, car. This is middle income America. And there are going to be a lot of people that are in this situation. If you add up their debt, they have $227,000 of debt and their monthly payment is approximately $1,700 a month. When you look at this family and when they're both working, life is good. Because if you assume a 25% tax bracket, their take-home pay is $82,500 a year, basically $6,800 per month, and their debt payment is only 25% of their take-home pay. So the bank's going to be okay with that. 25% of your income going to pay down debt. That's pretty happy. This couple has a lot of discretionary money, and life is good. But what happens if one of them dies? If Cindy dies, who had the higher income, Kevin would have to rely on his income all by himself. And you can see that on a monthly basis, 61% of his income would have to go down to pay his debt. Their bank isn't maybe going to be too happy with that. Kevin's going to be sad because he doesn't have Cindy anymore, and he's going to be stretched very thin with his income. So things are going to be bad. Life is going to be bad for Kevin. The same thing happens to Cindy. If Kevin dies, it's not going to be as financially hard, but Cindy is still in a situation where she has too much of her paycheck going to pay down debt. So in this situation, 42% of her income is going to go to debt. And here's the problem. Obviously, they realized that they wouldn't be able to maintain their current lifestyle in the event one of them dies. So what are the solutions? Most people in this scenario buy what type of product? Term insurance, right? And why would they write term insurance? Because it's the cheapest. Now, I'm going to ask a question. Is term insurance the cheapest over the long run, or is it the cheapest in the short term? Well, it's only going to be cheaper in the short term, and here I'm going to show you what I mean by that. So if you look how much this couple would pay in term insurance over 30 years, it's $19,410. $650 a year, that's pretty dang cheap. I mean, the coverage is there, it's good, it's over the course of 30 years, and they would have paid $19,410. Some advantages, it's inexpensive. Some disadvantage, well, it is temporary. There's no equity being built up, it's limited, but it's there if they need it. But what if we look at a first to die policy instead? The premium's going to be a little over $3,000, and I know you're going to say to me, hey, Andrea, you just went from $650 a year to $3,000 a year. How are you going to do that? Well, what you can show the consumer, because remember, they have the income to pay it. They have more discretionary income, no kids, is that you have to think about this in the long run. Over the long run, since this is a participating whole life plan and it earns dividends, in the 30 years when they would have had a $19,000 out-of-pocket cost with the term product, they would have actually had cash value gain of $32,000 in this policy. Because with dividends, the cash value would have grown to $126,000. They would have paid $93,000 out of pocket, so the net is basically a gain of $32,000. So instead of being out $19,000, they actually gained $32,000 by going with a joint whole life product. Plus, you get all the other advantages of having a participating whole life plan. Guaranteed coverage, a premium that will never increase, the option to take out loans or withdrawals from the cash value, even the option to surrender it later on. You can even look at the cost savings comparing it to the purchase of two separate whole life policies. So if you were looking at our joint whole life or LifeScape whole life, there's a 31% savings over buying two separate policies. I mean, that's exciting. That's exciting. 31% savings, and they get permanent product, permanent protection. So that's my summary of the joint whole life product. I know we've kept you a little long on this webinar, so I'm going to move on real quick and show you what else we have to offer. Now, the joint whole life product is a great product, but it might not be the right fit for all situations. We have a lot of other products available in our portfolio, 22. I'm just going to go over the best of the bunch. If your client is, let's say, a small business owner and needs some flexibility, well, then you might consider this product. It's a universal life current assumption, especially if the client's more conservative. So they don't want anything tied to an index. They want something that's going to be pretty straightforward. We have a guaranteed crediting rate of 3% on this product, and the current crediting rate is going to be banded by face amount. So if they have 75 less than face amount, it's going to be a 4.5 current crediting rate. It's 4.75% if the face amount is 75 or higher. This product is also issuable to age 85. So if you have an older individual, I know there are a lot of products out there that end at 80 for final expense coverage for issue age. This is an option that you can consider. We do go all the way down to $25,000 in face amount. It also has the non-medical limits built into this product as well. So you can get this type of product on a non-medical basis at some of those lower face amounts at the standard risk class. We have the non-med term 350. I know a lot of individuals are familiar with this product. It was repriced in March of last year, but it's still a great option, and it's used very highly in the mortgage insurance market. Some great niches we have with underwriting are for individuals age 40 and below, looking for $250,000 and less in coverage. And they can go all the way up to $350,000 in face amount with no medicals. no blood draw, paramed, or urinalysis. The term 350 plus products, that's our fully underwritten term. There are going to be some medicals generally required with this product. We're very competitive for older ages, 66 through 74. The face amount on that is $100,001. Very, very competitive. It's also very competitive if you sell a lot of return of premium term with those higher amounts. If you are in that market and you do have clients that fit that need, I would highly encourage you to look at us. The simplified whole life, this is what a lot of individuals think of when they think of final expense coverage with a surety. It's great for individuals working that health or Medicare market. We will go all the way up to 80 with it. It's a whole life plan, but it does not earn dividends, which means it's non-participating. Another great thing is there is a graded and modified option available with this product, and it only takes the one application. So you fill out the application and you pretty much know where your client's going to be for coverage. We do a phone interview for individuals age 60 and higher. That can be done point of sale as well. I know a lot of people ask or call in and say, does the surety have any guaranteed issue products? Well, the closest thing we have to guaranteed issue in our portfolio is the AcciFlex accidental death benefit product. There's only one health question, and it relates to being diagnosed with HIV or AIDS. So if your client can answer no to that, they're guaranteed to have accidental death benefit only coverage. It does only cover death as the result of an accident, but it's great for higher risk occupations like police officers, construction workers, anybody that you've had that have been declined due to their health. They might not be able to obtain any kind of traditional life insurance coverage, so something would be better than nothing in those situations. This is what you could consider. It's also great if you have individuals who do have younger individuals who have mortgage or have a need for high mortgage protection but can't afford to put all of it on traditional coverage. I know the rates for a younger individual are a little higher for accidental death benefit coverage because honestly, if you're younger, you're more likely to die as a result of an accident versus somebody who's older. So accidental death benefit is good in those situations as well. We have a great living benefits portfolio. One thing I've talked about a lot in this presentation is that middle income America values convenience. And one great way to provide a lot of value to your middle American clients is by offering them package options. So if you're in there talking to them about their mortgage needs, well, they might also be a candidate for disability coverage as well. If they think that they have enough coverage through work, they may not, especially if they're highly compensated via bonuses. They might only have short-term coverage through work and not a long-term plan. So a lot of individuals do have the need for a personal DI policy. You can, when you're in there talking to them about their life needs, go in and also talk to them about what would happen if they got sick, hurt, and weren't able to work. How would they survive? Would they be able to go 6 months without an income? This is a great option. Non-medical underwriting, it will cover most of the people in our demographic. People making $60,000 or less can apply for a $3,000 monthly benefit without any income documentation and no medical. It's also highly customizable with the benefit periods and the elimination periods available. True own occupation definition during the first 2 years. And then we have a simplified critical illness product that goes up to $50,000 in benefit. It pays out in the event of a heart attack, stroke, some other conditions such as advanced Alzheimer's disease. It's a great complement to high deductible health plans. It's a good door opener, door closer. You can go back and sell this to your existing book of business. It covers 12 different conditions, has a 3-category approach to payout, so it can pay out up to 3 times. And the average premium at a surety for this product is $40 or less per month. So it's really great to go out there and talk about the need for critical illness coverage. And with our portfolio, I know that Levinson's went through all of the different promotions that you can qualify for. We also have a trip here at Surety that you can qualify for, and that's our Leaders Conference next year in Dublin, Ireland. The contest goes all the way through December 31st of this year, and any disability or critical illness sales count double towards the promotion. So I hope to see some of you in Dublin, Ireland next year. And then as I wrap up today's presentation, I want to thank you for being on the line with me today, and thank you, Bill and Joe, for providing me with the opportunity to present. What I want to leave you with today is a challenge. Think about the couples that you know that rely on two incomes. Maybe their term insurance is about to expire, or maybe you wrote them some small policies. But go back to those individuals and talk to them about joint whole life and why it makes sense, both from an economic standpoint and from a protection standpoint. Don't be afraid to mention our living benefits as well, the disability income and critical illness. So thank you.
Okay, great stuff, Andrea. Good job. We appreciate it. And keep in mind, most of those products have an e-application. They come with the full one-year scholarship, and full renewals are paid to agents. So that's a big plus. Okay, we're going to end with this. Obviously, we all want this year to be the best year ever in business and our personal life. So we want to end with this Mark Cuban saying here. I love this. Work like there is someone working 24 hours a day to take it all away from you. And I'm going to end with this, and I think it's going to really help everyone in our day-to-day sales life. So follow-ups are huge in our day-to-day work life. And keep in mind, this is a LIMRA statistic, that all sales are made, okay, or most, in the 5th to 12th call or follow-up. Okay, so that's huge. That just goes to show you most sales are not made on the number 1 through 4 touch, either phone call or in person. So 5 to 12 follow-up is when most sales are made. So keep that in the back of your mind. Stay persistent. Keep your foot on the gas. With that said, thank you very much for attending our webinar today. You'll receive an email today in your inbox with all of the information that we went over. So again, special thank you to Andrea, and thank you to all of our agents who attended. Have a great rest of the week and a great weekend. Good selling.